A freelancer earning $85,000 just got hit with a $15,000 tax bill in April, and they have no idea how it got this bad. No quarterly payments, almost no deductions claimed, no retirement contributions, no S-Corp. They basically handed the IRS the maximum possible amount of money. I am going to walk through this exact scenario step by step, show you where the money is going, and then do a complete tax makeover to cut that bill almost in half. If you are a freelancer who has ever been shocked by a tax bill, this is for you. Let us start with the before picture. This freelancer is a single filer, freelance web developer, $85,000 in gross revenue on Schedule C. They claimed only $2,000 in business deductions, mostly some software subscriptions. They made zero estimated tax payments throughout the year. They have no retirement account. They are paying for their own health insurance but did not deduct it. Let me show you exactly how the math creates a $15,000 bill. Gross income is $85,000. Minus $2,000 in deductions gives net self-employment income of $83,000. Self-employment tax is 15.3% of 92.35% of that net income, which comes to about $11,700. That is just the self-employment tax. They also get to deduct half of that SE tax, about $5,850, as an above-the-line deduction. So their adjusted gross income is $83,000 minus $5,850, which is roughly $77,150. Subtract the standard deduction of $16,100, and their taxable income is about $61,050. Federal income tax on that for a single filer in 2026 comes to roughly $8,600. Add the $11,700 in self-employment tax and the total federal tax bill is about $20,300. If they had a W-2 job the prior year and their withholding covered their taxes, then they owe the entire $20,300 this April, with underpayment penalties on top. That is how you get a bill that feels like $15,000 or more after any small credits are applied. Now, let me do the makeover. We are going to go through 5 specific changes and I will show you the dollar impact of each one. Step 1 is claiming all legitimate business deductions. This freelancer works from a dedicated home office, drives to client meetings, uses their phone and internet for business, and bought a new laptop during the year. Here is what they missed. Home office deduction using the simplified method, 200 square feet at $5 per square foot, gives them $1,000. Business mileage at 72.5 cents per mile for approximately 4,000 business miles is $2,900. Phone and internet at 50% business use, roughly $1,200. The new laptop and monitors, $2,500, fully expensed under Section 179. Professional development courses and subscriptions, $800. Business insurance, $600. That brings their total business deductions from $2,000 to about $11,000. Their net Schedule C income drops from $83,000 to $74,000. Step 2 is deducting self-employed health insurance. This freelancer pays $700 per month for their own health insurance. That is $8,400 per year, and it is fully deductible as an above-the-line deduction for self-employed individuals. This is not even an itemized deduction. It comes right off the top of your income. That alone saves roughly $2,000 in taxes at their marginal rate. Step 3 is contributing to a solo 401k. This is the single biggest lever most freelancers ignore. With a solo 401k, they can contribute up to $23,500 as the employee contribution, plus up to 25% of their net self-employment income as the employer contribution. $74,000 of net self-employment income. The employer portion works out to about $13,700. They could contribute up to $37,200 total, but let us say they can realistically put away $15,000 between both sides. That $15,000 comes directly off their taxable income. At their marginal rate, that saves roughly $3,300 in income taxes, and they are building real retirement wealth at the same time. Step 4 is the QBI deduction. The qualified business income deduction allows this freelancer to deduct 20% of their qualified business income, and this is now permanent under OBBB with a $400 minimum. After claiming proper deductions, Their QBI is around 74,000. 20% of that is 14,800. This deduction does not reduce self-employment tax, but it significantly reduces their income tax. At their marginal rate, this saves roughly 3,200. Many freelancers forget this deduction or do not realize they qualify for it. Step 5 is setting up quarterly estimated payments going forward. This does not reduce what they owe in total, but it eliminates the underpayment penalty, which can be several $100s, and it prevents the psychological shock of a giant April bill. Divide your expected tax liability by 4 and pay quarterly on April 15th, June 15th, September 15th, and January 15th. I also recommend they evaluate an S-Corp election for next year. If they continue earning at this level, electing S-Corp status, and paying themselves a reasonable salary of around $55,000 while taking the remaining profit as a distribution could save them approximately $3,000 to $4,000 per year in self-employment tax. That is a next year optimization, but it is worth planning now. Let me show you the after picture. Gross income is still $85,000. Business deductions are now $11,000 instead of $2,000, bringing net Schedule C income to $74,000. Self-employment tax drops from $11,700 to about $10,400. The health insurance deduction of $8,400 and the solo 401k contribution of $15,000 significantly reduce adjusted gross income. The QBI deduction further reduces taxable income. When you run all the numbers, total federal tax liability drops from around $20,300 to approximately $12,000 to $13,000. That is a savings of $7,000 to $8,000, and $6,000 to $7,000 of that is real money they keep forever, not just deferred. The before picture was a freelancer handing the IRS every dollar they could. The after picture is a freelancer using every legal strategy available. Same income, same work, thousands less in taxes, and $15,000 going into a retirement account that will grow tax-deferred for decades. If you want me to do more tax makeovers like this, let me know in the comments. Subscribe and hit the bell so you do not miss the next one. I release new freelancer tax strategies every week.